Yes. Hello, Robert Dobrzycki, CEO of Panattoni in Europe.
Hello. I think I made my introduction already earlier. I think no new people here. Raymond Petzman, VP for Corporate Real Estate from Zalando. Zalando e-commerce retailer with 10 billion revenue and almost 15 billion GMV. So 4 buildings in Poland. The fourth with Robert under construction in the moment.
Maciej Tuszyński, Fortress REIT Limited. We are a South African real estate investment trust expanding across CE markets for the past 2 years.
Okay, and tell us a little bit more because I know Fortress is just at the brand is just starting to come out a little more and more. So who are you connected to? What do you see going on in the market for you guys?
Oh, there is a lot of going on. I mean, we are just observing. I think the other panelists are better equipped to say where the market is heading. And
what is going on with you, your company, let's say?
We are focused on 2 asset classes, retail and logistics. I represent the logistics arm. We are also the largest shareholder of Nepi Rockcastle. With almost 24% shareholding. So we've been in the region indirectly for a number of years now. And now we are trying just to build the asset portfolio in the logistics sector, both through the acquisition, cooperation with developers, and also developing from time to time objects on our own.
Okay, Raymond, tell us a little bit more about Zalando and sort of plans for Central Eastern Europe on the real estate side and logistics side.
So, to be honest, in CEE, so I guess the Bitcoin project what we are undertaking right now is probably for the moment, one of the not one of the last, but for the moment, probably the status quo. We have to go a little bit further west, but of course, the development times now getting longer and longer, and we have to think about buildings in 4 years. So definitely something to come again in 26, 27 probably, where we have to go further east. And we also expanded our markets in Romania and some other places in South Europe. So we actually almost everywhere in Europe. That means we need our network also closer. So I'm sure there will be something. For the moment, probably this building is one of the last for the next 2 years in CEE.
Okay, so Robert, good to see you. Thank you for joining us on the panel today. Tell us, I know it's going to be a long answer, but tell us a little bit about Panattoni. For if there's anyone in the room that doesn't know, maybe they're not in logistics, but tell us a little bit about what you guys are doing and really how you see things going forward. Because I think everyone's enjoyed the past. What's the plans for moving forward? How do you see clients reacting in this situation?
Yes, so obviously, for those who don't know us, obviously we are a logistic development company, US co-owned, US based, but very large in Europe. We are present in Europe, in Central Europe since 2005. We are present in most of the countries in Europe right now. We are probably the largest development company in Europe in terms of logistics. I would say probably by far. We develop warehouses, fulfillment centers, last mile facilities, production facilities in all the places we operate. So we are pure play logistic company. And obviously last years were very favorable for our sector. We still think that the future is bright with some kind of a temporary clouds, obviously. I mean, these clouds are for everyone, I would say, and probably our asset class is not so much affected, but still some challenges ahead of us. I would say challenges from the supply standpoint, not from the demand standpoint. Demand is extremely strong, but supply side is challenging, and is challenging in terms of kind of a construction cost instability, in terms of valuations, in terms of availability of labor. So all the things which you need to build a building are under pressure. And that causes a bit of challenge. The good thing is that the tenant demand is still very strong, and in our opinion, will continue to be strong. Our kind of income tenant base is very diversified. After COVID, probably e-commerce is kind of slowing down a bit, with a obviously positive trend in the long run, which still is obvious, but in the short run is obviously a bit of a COVID hangover, where people came back, and obviously there's less need, which is kind of a bit of like a dip, but the trend is there. But we have others kind of income generating kind of sectors, which is nearshoring. I mean, shortening supply chains, and we see a lot of demand and preservation of, also trying to make the supply chains more resilient rather than efficient. So bringing warehouses and production facilities closer to the consumer base rather than locating them in Asia and maximizing the profit. So there's a lot of positive things even today. So we don't feel like a problem demand-wise, but clearly the challenge is to build the building.
Now, is that just because of the costs, or is it really hard to actually find the physical materials and get them delivered to the site, or is it just a matter of paying?
Well, I think it's a kind of instability of costs, and recently also valuations and interest rates. So it causes the leverage to go down, it causes the cost to go up, and obviously it causes the more equity need. And it happens very quickly at the same time, so putting the project together is much more challenging, which, again, you always look at the bright side of the whole thing. It would probably make our life easier in the competitive landscape. There would be less competition.
Yeah, sure. So is it whenever I talk to e-commerce guys now, they're like, oh yeah, it's, things have really gotten tough, but they're still double-digit positive, still growing pretty hard, just still growing quite a lot, just a lot less than when everyone was locked down at home and ordering. So is it just that a lot of things were built quickly for e-commerce, and now they're thinking it was 30% every year forever, and okay, now the buildings are coming to finishing now, but still it seems like most of them are expanding pretty well.
And I guess that's the question to Raymond, but I guess it's the most visible in Amazon case. I mean, they were growing so fast. They were trying to respond to COVID kind of a needs, but obviously they don't need so much today, but they will need so much and more tomorrow.
Right. So Raymond, just quick, you already answered the question that it's slowing down, or at least, but is it slowing down but still expanding pretty fast, or is there really a consumer issues on the market?
I would guess that we see a consumer issue. Is the pockets are tighter, but the point is, I think nothing in the fundamental has changed. And what is hard to understand, that just when Robert was speaking, I remember the last time I was here and I even had a presentation. It was about exponential growth, and that's something. What it is, it's an issue of exponential growth, and the bigger you are, the bigger is your problem. That's why, for example, Amazon, which I know very well from my 17 years. But of course, if you have, for example, we have 14 buildings right now, so with all the return centers and everything. So when you grow 24%, is exactly doubling every 3 years. So that means you need another 14 years in the 14 buildings almost in the next 3 to 4 years. If this changes now to 10%, then you have 7 years. So that's the huge difference. And you have to build something. And it's also not that people in Amazon or in our world are stupid and just build too much. It's just you have to, because otherwise you have not the capacity. And that means now certainly that there is a certain pause or grace period. And to be honest, sometimes I'm actually happy because it was just crazy, and you just had to do something, in a very short time, get the permits. You had not even time to think about sustainability initiatives, because that's something what is really close to my heart, that you want to change the way we build buildings. But if we have just to replicate building after building, there is not a lot of chance. But the advantage of being an old white man is also that I have gone through some crises, and I remain optimistic. We had this 2008, 2009. And of course, some people refer saying the inflation was not the same at this time, but the inflation, as Robert said, is also very much supply driven. So it's because there's a lot of material, because that's how it started. And I guess that's also the reason why the central bank in January was still saying, that's maybe not an inflation, this will go away if the supply, what was at this time only driven by China and, COVID. But of course, now with the war, we have some other issues. And I never want to put this down. Of course, a war is a different scenario. So we never had this in Europe because that's what it is. But still, I think the fundamentals have not changed. As soon as the consumers feel better, and a lot is also sentiment, because people. If you see Germany now in the morning, I actually saw on the news they're talking since summer about the high gas prices, and suddenly it's actually almost lower than it has been in March because there was a good procurement and everything. So people expecting that they have to pay a lot in winter for heating and power, and they're not spending. But I'm pretty sure that it will come back. So we are at least preparing. We pause a little bit and say, okay, we take the time, but still looking into our expansion plans.
Yeah, I mean, the LNG ships can't even unload the gas, right? Because there's no place to unload it to all of a sudden. I'd like to. Okay, that's pretty clear on the e-commerce where we're going on that. So this will be for Maciej, or obviously for Robert as well. How are you guys seeing the manufacturers coming in? Like Robert touched on it, but the manufacturers from that are manufacturing in Asia, but now moving to Central Eastern Europe. I mean, when COVID happened, everyone said, "Yeah, we're going to move. We're going to be closer." But of course, it doesn't happen overnight. Moving a manufacturing plant or getting the right people or just sourcing closer. So Maciej, how are you seeing this in your business? Are you getting more and more of these type of clients coming to your locations and with requirements?
Well, that is very much dependent on the particular location, I would say. Yeah, there are pockets where they are more geared to host such clients. However, well, I'm a bit shy to say that there is like a trend or a wave, but certainly we get such requests, and you can see the companies coming. They are from various segments. Also, medium-sized companies are coming with the production relocation. But what have been observed, at least in one instance, is that a Chinese company is looking to set up a production facility in Poland, for example. So that's something I don't think I have ever thought of. But then you discuss certain issues, and all of a sudden, Southeast China forklift driver costs you more than the same guy in Poland, for example. So there are things that are changing dramatically. I don't think it's cost-driven. It's being driven by other factors, but also those typical production guys from the Far East. They are thinking not to miss out, and they are also thinking about diversifying the production sites, which provides an opportunity. Whether this is going to be a long-term, stable trend. Well, let's see. Definitely, Robert touched on the point of labor shortages, and this will be the decisive factor here. Whether you can access at least basic qualified labor force at a reasonable price. That's for those tenants most important.
Yeah, I mean, that's kind of why I wanted Samuel to do the PRS a little bit, because on a lot of these, when I'm talking to a lot of the manufacturers and a lot of the production guys, they're like, well, we've got a great facility. It was built by one of the developers. We love it. We just can't seem to get enough people to the factory. We've either got to bus them in for an hour or somehow get them in earlier, and then with a PRS or these systems of getting something open in a year or in 7 months or in 2 years seemed like a potentially good idea for or a solution for some of these factory owners. I mean, are you guys noticing that trend that way? They're looking at what's really happening on the HR and running into problems? Or housing even for them.
Absolutely. I mean, we are trying to cooperate with municipalities where we are having our projects, and they are quite happy to step up and discuss with the investors face to face, prepare, like a labor force market reports, show them some comparisons to the other cities. Usually, the smaller the cities, they are trying to take advantage of this and trying to showcase that even though the unemployment rate is minimal, yet the people from the smaller cities, they tend to work in the bigger cities. And if they are offered the same pay, they would save on the travels, remaining with the smaller cities. So That is a nice factor, and it's easier to work with the smaller municipalities sometimes because, well, they see their business case similar to ours.
The local mayors, I guess, the mayors, city architects. Robert, are your team dealing with HR issues or HR problems, or do you have a solution for them?
Yeah, well, obviously the labor element is a key element for most of the companies on the production side or e-commerce side to choose the right location. But at the same time, if you want to be, I mean, as mentioned before, if you today want to set up a kind of a production line in Europe, you locate that probably in Central Europe. You don't do it in France. So from that standpoint, the direction is clear. In Poland, still labor is much more available than in Czech Republic, for instance. So it's much better if you don't have to be in Czech Republic, you locate yourself in Poland, proximity-wise. And then in Poland, what is key is the growing infrastructure is making some locations closer to the Western world. So, for instance, Bydgoszcz is a great example that we built for Zalando. I mean, a lot of big companies are located in Bydgoszcz because of the infrastructure is getting closer to Western Europe, and it's a quite large place labor-wise, and it's quite large place also to attract the labor from the villages outside. So infrastructure helps to open up eastern parts of Poland where there is much more labor, because it brings closer the eastern part of Poland, distance-wise, time-wise, to Western world. So today, I don't think the labor is so crucial it was a year ago. It's still the issue. It's still the decisive factor. But I guess in the short run, we are dealing with bigger deals, bigger issues than
the labor.
Than the labor.
Well, Bydgoszcz, I guess 10 years ago, you would never talk about opening an internet distribution place there or getting product to Germany.
Well, that's correct. I guess Zalando is also, that's for Poland too, right? But it's probably a combination.
Yeah, and I think it's a very good example how infrastructure, provides opportunities. So, as I said before, 2014, when we started the project for Amazon at this time in Poland, really investigated. There were Poznan and Warszawa were the only places you could go. And nobody would have thought about Bydgoszcz. That's far away, no highway connection. But now it's actually good. I think it's almost a hidden champion, and more seeing it because you have the highway. I'm not sure when it's opening from Poznan to Bydgoszcz, but I think it's soon. And then it's a complete different story. Suddenly you have this connection. So, but labor is certainly the biggest challenge. So why you ask, it's actually a good idea when you ask whether Robert is dealing with HR topics. I was thinking maybe in future we have to ask every developer, say, we only sign a contract if you and your company comes at least for 2 weeks to work for us, during peak.
Included in the deal. Robert's never coming back to my conference then.
No, but it's probably one of the biggest challenges to find the labor. And there was yesterday, by coincidence, I heard a podcast also about it's always about share prices and everything, and they were talking about Amazon, and it was interesting. They made a calculation as big as they are in the US. That probably in 5 or 6 years they have almost hired everyone who is actually in this labor market in the US, because they're so big, and then they actually have so much churn that they have to start to hire the same people again, and that shows you how big the problem is. Of course, it's a much bigger company, and you have to do something, and probably automation is one of the solutions, or it might change again. Also, we see now new ways of immigration, and that's also something what most of the countries don't like to admit. But I think without immigration, you cannot run the companies, the countries. In Germany, sometimes I wonder where all these people gone, because everywhere you go, we don't have any stuff anymore. In the restaurant, they tell you that we don't have it. They went to Amazon or to Zalando, but we don't have them neither. So I don't know where they are gone.
They've gone somewhere. Well, let's switch gears off of HR and kind of switch over to investors. Robert, whenever I talk to any massive investor, they're like, yes, we know Robert Dobrzycki. He's our best friend, and we're the premier investor with them. I'm like, oh, great, fantastic. Yeah, we're doing these projects, that project. But anyway, beyond that, what is the investment? Let's say, what what are investors telling you now? What do you, when you come back to them and go, look, it's costing us this, it's costing us that, things are growing, it's a bit more difficult. I'm sure they know that by now. If they're watching the news, what is investor sentiment? Is it really just doesn't matter, Robert? Just build it. We'll pay extra, and we'll be happy to pay the extra finance charges as well, or is it what are they telling you these days?
Obviously, this year is a kind of a year of adjustment where we see, I mean, there was kind of a pretty big growth in kind of a construction cost, and at the same time, we have kind of a pressure on interest rates and on valuations. So many investors are trying to figure out what's the right pricing, what's the right valuation, and they are holding back the decisions. They still have the money allocated to the sector. There is still, I mean, positive view on the sector. Probably, in my opinion, is still the best sector going forward, and from many of them is too. But they're kind of in the short run, they are trying to figure out the pricing. I mean, these interest rate increases are not done yet. I mean, inflation is still there. So obviously, until inflation is not in control, there'll be still pressure on interest rates. If that's the case, then those kind of a question mark a bit about valuations. So you need to build up today a lot of cushion, yield-wise, to attract capital. And obviously, the capital is looking at rental growth, which is happening, which is showing up. So the investors usually are looking at the rental growth at indexation, at potential, at location, so they can grow through rental growth in the short run, and while waiting on the kind of improvement on the yield side. So that's the theme today. The tenant demand is extremely strong, so you can recover any increases through your rental. You just can't block the rental. And blocking the rental is obviously, one way is obviously long lease. I mean, you probably should prefer to kind of sign shorter leases these days. And obviously you protect your indexation as much as you can, because that's the only way to recover the inflation and interest rate potential still going up.
And rental growth, if I'm wrong here, tell me, but rental growth was really quite a new thing for Poland in logistics, I think. Wasn't it?
Yes, it is. Yes, it is. It was pretty flat for a long time, and we were experiencing amazing kind of a capital market story. So there was yield compression, and there was a tenant demand. There was a volume play, so you were kind of passing that yield compression to the tenant, which is obviously going away currently, and construction cost was very low. So construction cost was kind of the lowest in Europe. There was yield compression, so you were passing that to the tenant in terms of kind of lower rental, which all these pieces are gone now. And Poland is still probably the cheapest rental-wise, but the rents are going up significantly.
So everyone that was renting the last 10 years at the same exact amount every day is having to change the business plan a little bit.
Absolutely. But I think it's happening in all sectors in Poland, also in offices. I was rushing to sign my office lease recently. I mean, like really rushing.
Oh, okay. Because it was going up.
Well, I don't know, but that's what I felt, that it will go up.
All right, good. And Maciej, as a developer and an investor, tell us about the two hats you're wearing. What do you feel as an investor going forward? Where's the pricing going on this and the investment?
Well, wearing two hats, I feel schizophrenic a little bit sometimes. Well, look, I mean, we are trying to have, let's say, a bit of an opportunistic approach. So, you know, as Robert mentioned, the market is readjusting at the moment. So for us at presently, the question is whether to develop or maybe to buy certain assets that are repricing. And that is at the moment on the, let's say, equal proportions. Definitely banking on the rental growth. Which is happening. I'm just always laughing that the companies that are usually paying like €5 rents in Prague, you know, they are, you know, really scared to pay €3 in Warsaw or even 8. Okay, yeah. So those are usually the top multinationals that complain the most, even though that they are accustomed to much higher levels on the other markets. But I think that diversification in terms of tenants is a good product. We are still building our portfolio, so we are looking also through the perspective of where we are, where we want to be, exposure to which markets we want to have. Still, when you think about years to come, and we are a long-term holder of our assets, I think the buying from developers or developing assets is still a very interesting proposal because, well, you get them up to the technical specification, which is the current market standard, and you're not buying something that is already kind of half amortized and not fulfilling all the criteria that were not present on the market some time ago. So this is also one of the things that you have to remember. You have to be on the top of your game. You have to know where the market is leading, what will be the requirements of tenants, maybe more automation because of the labor force shortages. So the buildings be retrofitted to a certain extent? What about the energy cost and so on and so forth? But, I'm not here to present everybody with clear statements on this because, well, we want to take the opportunities for us.
Sure. Don't give anything away. So, Robert, as you're covering most of Europe, and you just said, yeah, if they're building a production plant, they shouldn't build it in France and build it in Poland. But what are you guys building, and what seems to be the appetite in Western Europe? What are you developing? I met your country director from Italy, and I could see he's going to be building a lot in Italy. Seemed to be very, very positive about the market. I guess he has to be, but anyway, just not think on Italy, just in general. What do you see happening in Western Europe?
Obviously, as a general statement, Western Europe is consumption driven. So it's e-commerce driven. It's servicing the population. So that's what we would be doing in Western Europe. And I mean, we have a good example of one big production company which was selling land to us in Paris, and we were building for them a production facility in Poland. But on the Paris land, we will build kind of a facility for e-commerce company to serve Paris. So that's what's happening, and the same in UK. Germany is much more diversified, but also consumption driven. But and obviously, Netherlands is a kind of a port of Europe and the entry point of Europe, so pan-European facilities, logistic companies, distribution, which is serving more than itself than the Netherlands. So that's the general theme. But as a general statement, Western Europe we will be serving consumption. We will be serving the consumer in Western Europe, where in Central Europe we mostly serve the manufacturing and kind of a labor type side of the business, but also to some extent consumption locally, but consumption in Central Europe versus Western Europe is incomparable.
And we just mentioned the UK earlier, but just on your UK operations, do you since Brexit, I know you haven't been there a huge amount of time, but just since Brexit, have you seen business going up or going down?
We exactly came when Brexit started to UK, which we felt that's the perfect moment to come into this kind of a matured market and tight market, and it was much easier to come at that time. Our idea was that UK will stay UK. Logistic-wise was anyway isolated a bit, so any Brexit doesn't change that too much. So it's consumption-driven, and we have, I think, one of the best businesses for us in Europe is in UK right now. And obviously, politically, it's turbulent and Brexit and the whole thing, but there is a still big consumption base in UK, and we serve it. And we serve it fulfillment center-wise, I mean, retail-wise. I mean, it's a big business for us.
And on the investor side, are investors still lined up to buy these locations in either UK or Western Europe?
Yeah, absolutely. Obviously, right now there is a readjustment everywhere. So it's much slower than it was before, because I mean, Germany in January, or UK in January, or France in January was just crazy. Right now, there is a readjustment everywhere, but definitely Western Europe is much more liquid than Central Europe.
Okay, great. And of course, we're happy to take any questions from the audience anytime during the panel. So Raymond, let's go back to you. So you're finishing this one location, and then 1 year break, 2 year break. You see that the facilities you have is enough. Yeah.
No, I was also there. Are actually other buildings under construction. We have something in France, so it's a continuous development of new buildings. I'm just saying, especially for the CEE market, because that's particularly the focus now has been to do these 4 buildings here in Poland to serve the Eastern, because that's not only, somebody asked me yesterday during the dinner, it's just the extended workbench of Germany. It's not. So it's really, we are serving a lot of Polish customer and Central European, Eastern European customers. So that's, but in general, it will be just slow down a little bit. Instead of doing 3 buildings, we're doing maybe only 1 building, and that's again, But there's
still a lot.
It's still a lot,
big
and,
project,
and it just something also to show you the dimensions. It was always, I've been almost 17 years with Amazon. I've done 35 buildings, big fulfillment centers in Europe. And then I was on a world trip and did some sabbatical and enjoyed my life. And I did some keynotes, and then people always introduced me, that's the guy who built the Amazon network. At a certain point it was true, but then suddenly 2017 I told them it's not true anymore, because now they have 100 buildings. So in the 3 years I left, they have 100 buildings, so I've done 35 buildings. So it's much more complex, but that shows you the dynamic you have in this business. So we are still continuing. But one thing I have to say, and Robert probably knows it, because I'm always saying this when investors or developers are this rental growth thing. That's it cannot be the solution for everything that the occupier is paying the bill. I also think that there has been something in the market that everyone became a little bit greedy, and I'm not talking about developer. Everyone was, thinking, okay, the developers make a fortune, and suddenly the GCs also said, I can slightly, I can always test and tease and see, I'm getting more, because for a long time there was no reason. You have seen also construction prices doubling over a long time. And I was always wondering, where's this coming from? But it was everyone, you had to feed more and more mouths, and everyone became a little bit more greedy. And that's also something it has to consolidate. And that's also an advantage of a crisis, so that everyone is saying, okay, I have to be reasonable again and cannot do this, and not adding up and adding up. Everyone makes the same money and the occupier is paying it, because it's also not working. Maybe for us, could still work, but for some 3PLs, if you have labor costs going up, if you have transportation costs, energy costs going up, and rents going up in a low margin business, is maybe, especially in logistic, is not a good thing. But in general, I also believe that the logistic market is it's probably one of the shining asset class. Even I was surprised with this keynote before. There seems to be a market where there's still a lot of money in functioning.
Robert, after hearing that, I feel so bad for Zalando that you're charging them that they're so worried about the rent here.
Obviously, Raymond knows that I'm the last one to charge more. I would like to do more.
I have to say that's also something, because Robert was, at least with the educated occupier, always someone, where everything is reasonable. But there are some others out there, they just ask for, you had no influence, no open book, and they was just saying that's what you have to pay, and that's it. And these kind of developers I'm rather referring to, and GCs.
But unfortunately, in the short run, you have to recover. That's the only way to build a building. You have to charge a bit more to kind of make it up on all the pieces. So that's I don't see any other way. I'm looking at my budgets left and right, up and down, and that's the only hole I see.
And again, it's fine for me, because we are also educated, so we know the numbers. If it is justified, then it's okay. But it's just this, everyone wants to make more, and that's just, the times are over. We had one development. It has been sold, and they were even bragging about it on the internet, that they made 60 million with selling our asset where we had no influence. The rent was high. A little bit later, the son was with Jeff Bezos in space. So, then you know where the money is going to. Maybe these times are gone, where you can make 60 million with one deal. And at the same time, maybe the GC is also making 30% on top of it. And that's probably something, some of these guys, the old guys, old-fashioned guys, they probably have to rethink it and say, okay, it's maybe the super party is over.
So you were paying for all that fuel get blasting into space.
That's how I felt.
It was like 1 second of fuel
was
going.
The son of the developer with Jeff Bezos too, right? From Netherlands. Yeah,
that's the developer's son.
Yeah.
But for Zalando building, imagine, so we paid Jeff Bezos to fly.
It's that extra 2 zlotys for every shirt or something that was...
Yeah, because he was developing in Netherlands for Zalando, right? Yeah.
Okay, well, there you go. Make sure that if you're renting from someone, they don't have a spaceship, because it's going to be more expensive. So Maciej, let's jump over to you guys. You're doing, obviously, you're indirect investing with the old company, or investing in the company, and they're buying things. And what do you see on the, let's say, really on, if not on the end users, again, just coming back to that, is it really the manufacturers that you see coming in, signing long-term contracts, or let's say light manufacturing assembly? Is that more and more coming from either the East or the West?
Well, I have to be very clear. I mean, we are not specialized in, heavy industry or very specialized projects. We just don't understand this part of the market. So whenever we are talking about more industrial clients, it's light industry that we are talking of. But in terms of longer-term leases, I think the major change was on the pure logistic operators. They are willing to sign longer leases than they used to, and that's an encouraging factor. When you couple it with the news that DSV has published recently about the results increasing despite of higher occupation costs and higher transportation costs and the like, that makes encourages you to support the companies that are experienced enough to know how to run their business. Of course, that means that they are more flexible in terms of their contract with their clients, right? That they can readjust the pricing policy to meet the new market realities. But it was always so. I mean, maybe we have forgotten in the bonanza years to look at the basic parameters of all companies. But in the end, it was reflected in the price of assets, in the yields. I mean, if someone were to buy a Zalando warehouse or Amazon warehouse, they were prepared to pay the lowest possible yields, right? If those are the other tenants, you have to factor in the pure credit risk, which now plays a more important role because we are heading for a economical slowdown. Yeah, that's how it is.
And just looking at some of the pure logistics companies, we're in an event a couple months ago at DHL Supply Chain. They were celebrating 20 years or 30 years on the market. I can't remember now. But one of the comments that they had made is, "Hey, we are only moving into places or developing places that are net zero." I think they said, or carbon neutral places. So, Robert, to you and to Maciej, as developers, is this feasible? How difficult is it? Being pragmatic, are they really able to get net zero everywhere or carbon neutral locations? And what is there anything as developers that you do at the very beginning, even at the design stage, to make this possible?
Shall I?
Yeah.
Well, yes, it's very difficult, and yes, you have to try. I mean, whether we like it or not, I mean, I'm a lazy guy. I would prefer to, just to build a simple shed and lease it for a truckload of money and not come back to the project for the next 10 years. Of course, but...
Put some coal out next to it.
Yeah, exactly, yes. But those times are over, and the companies like DHL Supply Chain, they will lead the way, and they will insist on
charging stations, things like this.
Yes, and the market has to go that way. At least the premium market, let's say, and the others will follow. I'm only hoping that with, let's say, the growth of this approach, also certain technical specifications, they will become more affordable because simply, you have a bigger rollout of certain technology, and they will be tested. But I think we can discuss whether the wind blows in the right way or not. I mean, it's no point. You have to go. You have to strive. Whether you achieve a net zero or you're very close to it, that's the way to go.
But I would say it's not only where the wind is blowing from. Sorry, but I think we have to. There is no other choice. And also particularly as a occupier. So you have customers, and the way we position ourselves. Our customers are interested in the that the world continues to exist, and I know there may be some different views, but more and more, I guess everyone will understand that there is an impact, and we have to do something. And that's also an advantage of this crisis, because exactly what you said, we are so used to replication. So the whole system and the management is just required to steer the processes and manage the processes, and there's no interruption to say, okay, we have to change something, because you need a crisis to look into it and say, okay, we have to think about a different way how we do things, and that has to happen now. So we at Zalando have a step change project, and it's very interesting if you go into the details, because we find, I don't want to go too far because you have a panel later, but just something we've really looked into different models, how you can how you can do it, and we found that there's an inflection point. We can probably reduce 38% of the carbon, embodied carbon in the building, but this comes already with 12%. And afterwards, if you do more and more, then the cost increase is even higher. Suddenly then it's 20, 30, 40%, and at least in the moment it's hard to pay. So then the solution is probably that you look into recycle or a cycle economy or a cradle to cradle, that you say, okay, the steel has to be built in a way that you can use it again. But it's clear for me we have to do it, and I'm happy that more and more developers are also looking into it.
And personally, it's more fun. I mean, when you think about it, it's always better that we progress into the right way, yes? That we are more eco-friendly, that we do certain things with more common sense into it, yeah? I mean, why not flushing the toilets with the rainwater? What's the obstacle, yeah? We just had an easier and cheaper way of doing it before. Now it pays to implement those very simple solutions sometimes, which are giving you very high effect. Everybody talks about ESG, and the biggest influence, especially in our geography, is the wall insulation and the ceiling insulation, which gives you the best potential outcome there. You can think of many things, but this is also possible now because there is a bit of a rental growth and acceptance by the tenants as well. So you can afford to build it, thicker and more costly.
It's again the tenant, so we are not paying for it. So no, we are paying part of it, but it's also for the investors, because I think it will be part of the later panel. It is ESG. You have just a stranded asset, and that means you have to. The investors have to pay for it as well, and not only the tenants, because otherwise you cannot sell it anymore.
That's right. And Raymond, if they're building your toilets and using rainwater, it should be cheaper rent, because the rainwater's free, right? Absolutely.
Well, always find a reason to reduce the rent.
There's one more. Yeah. So anyway, we've got to wrap up this panel because we are running out of time, and we'll take a little break and come right back with our ESG panel. But I just want to wrap it up with our speakers. Any final sort of pearls of wisdom or angles that we kind of missed? And maybe Robert, we'll start with you.
Well, I'm always optimistic, and I'm still optimistic. I think readjustment, which is happening now, is good for the market. It's going to differentiate better companies from worse companies, and I think the future for the logistic market, e-commerce, is still there. It's still going to be the strongest subsection of real estate going forward, and we as a company, we plan to grow, maybe not so much as before. I mean, we doubled over the last 3 years, so we won't double probably within the next 3 years, but we'll grow. And yeah, I mean, we probably will see some opportunities on the way. We'll have less competition, feels like. Sounds like another exciting kind of a period in our expansion.
Well, it's always good to have a little less competition anyway.
But it's also good to have competition. I mean, because of that, you grew, you doubled over the last 3 years.
Exactly. Maciej, well, we'll go to you for any final pearls of wisdom or comments, and we'll end with.
Well, I would just simply like to leave it on a positive note. Yeah, what we are discussing is that the market will grow, still grow. Yeah, that's the most important. Whether the growth pace will be lower, yes, it will be, but it will be also more sustainable. You know, in the years to come. And I think the more challenges we face, the more it shows. You know, which companies are prepared to really professionally handle them. Yeah, as Robert is mentioning about the lower amount of developers. Yes, I'm pretty sure it's going to go that way because there were, you know, companies formed on the spot. It's guys like me have no idea about any technical specifications of the buildings, and they acquired a plot of land and they started building, you know, and leasing. And in a good times everything goes, but in a more difficult times, you know, it's professionalism that counts, the reliability of the partner, the credit standing of the tenants, and the buildings are not going to disappear overnight. The constructions are not going to be stopped, and you know, it's positive. It's really positive.
Yeah, true. It always looks great when the market's. Everyone looks like a professional when the market's growing at 30%, right? Everyone's an expert. Okay, Raymond, let's wrap up the panel with you as a big end user here. How do you see things going forward? Any final pearls of wisdom moving forward on this?
Pearls of wisdom is always difficult, but I echo Robert's sentiments. You know, it's you have to remain optimistic. You know, it's a cycle. It has been said at the table I was sitting during the breakfast. And cycles, the nature of a cycle is that it comes back. And if maybe we think there's a war and this could be terrible, but then I say if this happens, you know, then we have different problems. So then it's also that we don't care about economy anymore, whether that's good or not. So, but I'm very optimistic that it comes back, and that's also how we should see it. And sometimes it should be a little bit calmer. I see that there's this famous book, Slow Thinking and Fast Thinking. You know, that you make a lot of mistakes if you think too fast and make your kind of fast decisions. Sometimes you have to take the time and really think about what's coming in the future. And if you think about it, there's a lot of opportunities, and take the opportunity to change. I think that's also very important. We have to change, and every crisis is also an opportunity to improve, innovate, and change.
Well, great. Well, I've never been accused of thinking too fast. That's for sure. There's still plenty of mistakes being made, but never anyone saying, "Oh, you just thought too fast on that." Well, everyone. So I'd like a big round of applause for our panelists. Thank you very much.